Heaven knows how much silver is really flowing out of the world's exchanges and backdooring out of the ETFs, or how much the US government is accumulating. But whatever it is, it's all being done at an artificial price until it's not. And until the supply demand fundamentals overwhelm. And I really do believe we are entering that period of time, in particular with rising rates, putting greater and greater and greater strain on a banking system that will ignite the fuse of reality to a lot of people. And you could argue by that time, the market is so confused and so leveraged and so upside down that it'll be very difficult for most people to protect themselves in something like silver when there is a mass awakening by the public.
In recent years, allegations of market manipulation by J.P. Morgan have sparked concern among industry insiders and experts, raising questions about the potential consequences for the financial system. These concerns have been amplified by the conviction of two individuals associated with the bank's precious metals desk, Nowak and Gregg Smith, who were found guilty of spoofing, fraud, and attempted market manipulation in a trial held last year. The court's verdict shed light on the deceptive trading practices undertaken by Smith and Nowak, involving tens of thousands of trades in gold, silver, platinum, and palladium futures contracts, all traded through the New York Mercantile Exchange and the Commodity Exchange. As a result of these convictions, J.P. Morgan entered into a 3-year deferred prosecution agreement, agreeing to pay more than $920 million in criminal monetary penalties, criminal disgorgement, and victim compensation. Simultaneously, the Commodity Futures Trading Commission and the Securities Exchange Commission reached parallel resolutions with the bank. However, despite the significant penalties imposed on J.P. Morgan, many, including AndySchectman, CEO of Miles Franklin, have expressed frustration that the fines were pale compared to the profits the bank reaped from its actions. These allegations of market manipulation in the precious metals sector are not new and have historical parallels. In the 1960s, the U.S. government maintained a fixed price for silver at $1.29 per ounce. In the 1970s, the Hunt brothers famously attempted to corner the silver market, causing significant price fluctuations. While the intentions behind these historical events may vary, they illustrate how market dynamics can be influenced. A pervasive belief among some circles is that Wall Street institutions hold massive naked short positions in the silver market, contributing to the perception that more silver is available than there is. AndySchectman shares this concern, believing that J.P. Morgan and similar banks may be manipulating the silver market to maintain the appearance of ample supply. Before diving into AndySchectman's interview, subscribe to our channel and give this video a big thumbs up.
It's very obvious. Look, if J.P. Morgan, if what they did was so egregious to where they put 2 or 3 of their traders, including Michael Nowak, who ran the desk, in prison, then why were they allowed to continue to run the world's largest silver trust? Why was their fine $920 million, but their desk made $1 billion that year? They walk away $80 million up. No worse for the wear. It's a company that makes $1 billion in profit a month. There's no question that they're behind it, but the bigger issue to me is the fact that, and the reason you don't hear bitching around the world is that this is falling into the hands of the countries around the world that are accumulating it at subsidized prices, allowing a country like India to import over 300 million ounces. And, heaven knows how much silver is really flowing out of the world's exchanges and backdooring out of the ETFs, or how much the US government is accumulating. But whatever it is, it's all being done at an artificial price until it's not. And until the supply demand fundamentals overwhelm. And I really do believe we are entering that period of time, in particular with rising rates, putting greater and greater and greater strain on a banking system that will ignite the fuse of reality to a lot of people. And you could argue by that time, the market is so confused and so leveraged and so upside down that it'll be very difficult for most people to protect themselves in something like silver when there is a mass awakening by the public. And I do believe it starts with the banks. I think that is the fuse that lights the banks. I mean, even talking the commercial banks, they hold right now they have over $7 trillion in uninsured deposits, just the top 4 commercial banks. So, that's global, that's total. The top 4 commercial banks over 4.185 trillion in uninsured deposits. I mean, one of these banks goes and gets bailed in, and the whole fuse of chaos is set off immediately, where everything that we know to be true about market fundamentals and dynamics and prices and suppression, all change. And I have a feeling when that happens, companies like JP Morgan are going to be on the long side. And they've suckered as much as they can, to shake the weak hands, the money managers, off the tree again. But when that moment happens, I'll bet you dollars to donuts that a bank like JP Morgan will be on the long side, and it will put companies like it did Bear Stearns out of business very quickly.
In January and February of 2021, the world watched as the price of silver experienced a surge, courtesy of coordinated efforts by Reddit users who drew inspiration from the GameStop rally. However, it quickly became evident that the silver market, unlike GameStop, is significantly larger and more liquid, which made the possibility of a sustained short squeeze rather unlikely. While retail investors managed to propel silver prices to new heights briefly, they have since retreated to pre-Reddit levels. The meteoric rise of silver prices and its subsequent fall serve as a stark reminder of the stark contrast between short-term market volatility and long-term fundamental factors. AndySchectman has emerged as a voice of caution in these tumultuous times. He urges individuals to exercise prudence and remain aware of the potential risks lurking within the financial system.
But I mean, at this point, if you deny the fact that the metals markets are controlled by a handful of bullion banks with a vested interest of supporting the Western system, the bond market, at this point, it's a lost cause to try and convince you. The people that were there understand it. And if anything, it energizes them when the price falls. They understand what it truly means. And I think there's a feeling that we're getting close to that moment. And, we've been saying that forever. I'm the little boy who cried wolf. I'm on the cover of that book.
We all are.
But the wolf does come at the end. And I think people are beginning to sense that. They feel that not just in silver's relative underperformance, but just in everything around us on a large scale. And so I think people understand that, when the price gets knocked down at a time when it should be doing anything, but it's read the right way by the people that are at that show. And, yet I watched or I read a post that Jeff Clark, who I love, Jeff's a great guy, made a post on LinkedIn and got ravaged by the people, the people who don't see things the way we do, the mainstream, and ridiculed him for the way that, the reasons that the mainstream would. And I talked a lot about that. I said, I got a guy that lives across the street from me, one of the biggest money managers in Florida. And the only time that he ever mentions silver or gold to me are on days that it's down. And, it's just part and parcel. And the people who don't see what's coming will not have the ability to get out of the way of it. And I talked a lot about that. So, I think you can only save the world, Bix, one person at a time, starting with yourself. But when you look around and see the macro picture, if you don't see the danger in traditional assets, in bank accounts, in treasuries, which, the fall in the 10-year treasury amounts to one of the largest drops in recorded market history. And it's just beginning, in my opinion. So, yeah, there's a lot to be bullish about. But by the same token, if you're not understanding it from the way we look at things, it's easy to have that cynical viewpoint. And I understand it, but I think it's sad because the majority of the country will be blindsided by what's coming next.
The silver market's roller coaster ride in early 2021 serves as a reminder that financial markets are inherently complex and can be influenced by many factors. In light of these recent events and ongoing concerns regarding market manipulation, how can regulators and market participants strike a balance between addressing short-term volatility and ensuring the integrity and stability of long-term financial markets? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.